well every single day last week for Brent, up against small by just 0.5%, 105.89. No sign of any dramatic breakthrough for the weekend.
And remember, we were supposed to see talks this weekend, and they were pulled. JD Vance,
Have you, Mitch, and you focus on everything else? Data's been good.
You know, if you're a Fed chair and you want to look back and said mission accomplished and things are looking good, probably the better time to say, okay, I think I'll go hit the golf course.
Right.
So,
Colin, thank you. Appreciate it. Keep you out of that. Colin Martin at Charles Schwab. Keep you safe. Less controversy. Move on. We all just want to move on. I'm pleased the DOJ has moved on. I hope the Federal Reserve can just move on with new leadership that is going to be confirmed by the Senate and gets overwhelming approval by most establishment figures in the world of economics.
I just wonder what will actually shake this market in any capacity whatsoever. I mean, what scenario would actually give this market pause that either there's going to be a real loss of Fed independence in some capacity, whatever that means. People say that it already has happened on the margins, whatever, versus also wondering when inflation really starts to get on board. How high is the bar? Hike rates again? And that I think is going to be an interesting question.
That's the most important question. What does Kevin Walsh stand for? What's his reaction function? Does he make an argument to reduce interest rates, or is he open in the future to focus on in the months to come? Coming up, we'll catch up with Kristen Bidley of Citi Wealth. We'll speak to Olivia Watson of Apollo, Greg Danko of EY, and Dan Nowes of Nowes Investment Management.
Everybody has a moment where they put into action all they practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders? It was a rough and tumble world. And I thought, okay, I can rise up. I can play this game. And I did play the game.
It was great and it was depressing and it was disappointing.
Like sat down with me and said,
Join me for the podcast version of that. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. One decision is always better than no decision.
Even you have to be there to listen.
you don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping IQ. Money with Bloomberg players behind major transactions. Finance with Bloomberg Markets. And rates.
We do very well.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Roberts, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your price action and scores look like this. 4 weeks of gains on the S&P, looking to add to those gains this morning. Up by another 1/10% on the Nasdaq, just about unchanged on the S&P 500. Later this week, a week full of central bank decisions, punctuated by the Federal Reserve on Wednesday. And through the week, after the closing bell on Wednesday, tech earnings pick up in a big way.
Yeah, it's the central bank of the world, which is big tech. You've got the G7, all G7 nations reporting when it comes to the central bank meetings. But then $28.8 trillion of S&P 500 market cap reporting this week. This really is where all eyes are. Again, how high is the bar for big tech, given the fact that they've been the haven place, the place everyone's been hiding out amid a lot of volatility, at least in headlines? The bar seems very high, almost to justify the rally we've seen. Jim Reed of Deutsche Bank over the weekend was talking about the talk of an AI bubble from last year has receded for now. The powerful growth story continues to propel the sector forward while significantly offsetting macro market concerns around the war. What if they don't reach that bar? Does the market then go back to the concerns of macroeconomics and what is happening in the conflict?
Qualcomm in the pre-market, just adding to that rally for the chip sector. 18 days, a record could become day 19. Qualcomm in the pre-market is up by 12%.
And this comes in the heels of discussions or reports of discussions with OpenAI on the smartphone. This is interesting on a number of levels. Qualcomm specializes in some of the smartphone components. They would be working with someone who designed the iPhone, Johnny Ives, formerly of Apple. And then a real question here about the monetization of AI, the commercialization of some of these products. This gives an opening to the idea of how products can get into our worlds that actually have some of these details. And that, I think, is what people are getting excited about.
It's been such a crazy run for this sector. It's just insane. The gains we've seen, we haven't had a down day for this month so far, which is crazy. And then you hear from Jonathan Krinsky of BTIG, just focused on the technicals, that this needs to end in the equal and opposite direction. But that's what he's forecasting here, a major move in the other direction.
Yeah, and ultimately, I mean, I did get some messages while he was talking. Someone called him Cranky Krinsky. I mean, there is a sense that people felt like, not, I mean, like, fairness, like just because he was coming out with a negative projection, but there's this idea that there could potentially
I
be.
think you can dress that one up, Bram. It's pretty brutal.
Okay, but I don't think so. I think it's important to show the technicals. Let's move
No?
on.
You want to move on? I'll set up the next hour. I'll do that. All right. Coming up on the program, lost it. We'll catch up with Kristen Bidley of Citi, heading into a busy week on Wall Street. Greg Decker of EY, expecting the Fed to hold steady on interest rates. Dan Nars of Nars Investment Management, previewing major mega cap tech earnings a little bit later. Still lost it, by the way. We begin this out with stock stalling. Still lost it at all-time highs and crude rising. Kristen Bidley of Citi Wealth writing the following: use volatility as an opportunity to lean into structural themes tied to energy independence and sovereignty, supply chains for the next generation of AI implementation, and fiscal spending. Kristen joins us now for more. Kristen, good morning.
Good morning.
Not tying your outlook to this cycle. What's the reason for that?
Well, I think, okay, so if we look at where the market's trading right now, there are a lot of comments around at all-time highs, can this sustain? The reality of it is that being close to all-time highs is actually normal, that the market is trading generally 50% of the time within 5% of an all-time high. So we have to look through to the actual earnings and fundamentals and say, can that support that? Which is why I think this is a monster week. We need to say, okay, if earnings continue to grow, we've had 8 consecutive quarters of double-digit earnings growth in the US market. If that sustains, then certainly this investment is going to sustain, and then we're going to see the market climb higher.
We hear these kind of words a lot. Anchor yourself to structural themes, secular tailwinds. I do wonder how cyclical some of these secular stories are, which might not make sense, but let me pick a single name. Say Meta. Meta's a great example of that. That's quite a cyclical company, dependent on a lot of ad spending. And I wonder how well it stands up later this week.
Yeah, so if you broaden it out to the, let's call it Mag 7, Great 8, Elite 8, I think we just have to go back to this earnings story and then say, okay, these hyperscalers and where they're investing, do they have the money to continue to do that? So you have one part of the equation that's that. Then you lean into the fact, where's this money going? I think that was something we were talking about at the beginning of the year that we seem to ignore entirely. It wasn't about the war in Iran. It was all about, where is this money? Is it too much? What is the ROI? People are holding companies accountable for that ROI, but we have to remember that's flowing through into the economy, whether it's infrastructure, whether it's energy. So a lot of these kind of secular growth trends, we want to follow the flows.
Russ Kostrich of BlackRock earlier was saying that the market seems to have moved on from punishing some of the big tech names for announcing some of the big spending plans. Do you think that that's true, that we're going to see that this earnings cycle as well?
I think you're either on one side or the other side of this trade. On one side, you're saying, okay, we're becoming impatient and we want to see the ROI. On the other side of the equation, it's actually, are we in early innings? And I think the truth of it is you have these hyperscaler companies who have strong balance sheets, yet they've started to use debt to be able to finance a lot of this. However, they are continuing to deliver on earnings, funding all of this investment. And then I'm in the camp of, this is really early innings when we look at the productivity gains and what this could mean, not just this quarter or this week, but really looking out to 2030 and beyond.
Do you see any scope for some ramifications from the war in the Middle East, given the fact that there's a question about helium, about chip transportation, around security issues? I mean, how much do you think that could bleed into some of these earnings reports that we get?
So I think this is something when I was talking about what the market was talking about in Q1, then the war in Iran, the market seems very focused, that you can only have one narrative at once. And so right now, we're not discounting any of that. that I think what the market is looking at is what is the probability of a re-escalation? And the market's completely ignoring that this is something that could drag on for an undetermined amount of time. So what I would say to anyone who is worried about that, you have to make sure that you're diversified in your portfolios, and you have to make sure that you're taking advantage of hedging strategies, because we could see some volatility if we don't have a resolution to this conflict.
What do you like in terms of diversifiers?
So I actually very traditional diversifiers. So I'm going to sound very boring in this response. But when we look at fixed income, staying on the short end of the curve, intermediate duration, high in quality, the duration of our fixed income portfolios is averaging around 5.5 right now. But I also think staying kind of on the short end of the curve and cash and cash equivalents, you're getting a decent yield there right now. So I think that's an important part of the portfolio. I think gold as a ballast to portfolios, that's something we've been talking about for quite some time. It's not a huge position.
It didn't
But
really
it
work in
is-
the beginning of the conflict.
It didn't work at the beginning of the conflict, but it also ran up so much, and it was such a substantial run with a lot of retail participation. So some of that was deleveraging, shaking out some of the broader bid and chasing that trade. But as a solid core position, I think it's absolutely makes sense.
Why do you think it will start to work again? What are the forces that will generate returns?
So I think there's a couple of things. One, continued kind of central bank buying. We've seen that. Diversification away from the dollar. We still see a little bit of that activity as well. And again, it's not one of those things where we're saying it's a bullish play on gold. It's a portfolio diversifier.
It's funny how many conversations we've had 2 hours and 10 minutes into the program and hardly talked about central banks. We've talked about the future of the Fed with regards to Chairman Powell versus Kevin Walsh, but not really talked about it as a relevant factor in the outlook for the equity market, is it?
I think rates are certainly a relevant factor for the outlook of the equity market. But I think the equity market is also saying, okay, we're going to get used to what could be a higher than pre-pandemic rate environment, a higher than pre-pandemic inflation environment, and we're not going back to those levels. So we have to start valuing companies in line with that and really kind of pricing out rate cuts for this year. I think there's like another bull case though for the US equity market that we're not talking about, which is a supply demand component. So we can talk about fundamentals, we can talk about earnings growth, but when we look at the supply demand factor, there is a lot less equity than there was before in terms of companies staying private longer, share buybacks. There's been a de-equitization of the market. And then you look at the demand side is also very, very strong in terms of all of the new participants that have come in. So you have another factor of people really eager to get into this market and buy.
Given all of that retrenchment, does it make sense that people are talking about tight central bank policy at the same time that you have a re-equitization of the market with all the IPOs planned for later this year?
Great question. I think time will tell. I think the re-equitization of all of the IPOs, we need to actually see them come to market. We have seen that pickup in activity overall. That will be quite healthy. And it's actually another kind of catalyst for market activity and action that we saw on the back of bank earnings. A lot of activity, not just from the trading side, but also the deal making side, which is net positive.
Kristen, good to see you.
Good to see you too.
City, well, thank you for being here. We could see some major IPOs later this year. SpaceX, OpenAI, Anthropic.
Yeah, and it changes the dynamic that Kristen was talking about, where it had been a shrinking pool of equities with all the buybacks and people saying private for longer. Suddenly it's going to be a massive expansion with the biggest IPOs we've ever seen. Do people rise to the occasion and say it's a buying opportunity? Does it become a potential technical headwind? Most people seem to see it's the former, not the latter.
Savita over at Bank of America believing this might be a headwind for the market later this year. We'll see. Let's get you an update on stories worldwide this morning with your Bloomberg brief.
Carrying multiple guns and knives, charged a Secret Service checkpoint at the White House Correspondents' Dinner Saturday night. One officer who was wearing a bulletproof vest was shot and taken to a hospital. The acting Attorney General says the suspect was targeting members of the Trump administration. Senator Tom Tillis is ready to advance Kevin Warsh's nomination as the next Federal Reserve Chair. Tillis says the Justice Department's decision to end a criminal investigation into current Chair Jerome Powell removes a threat to the central banks.
Next on the program, the morning calls. Plus, we'll catch up with Olivia Wassenaar of Apollo on opportunities in reliability this morning. Good morning. Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology in every aspect of our lives.
Foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekend
Only on Bloomberg Television.
when news breaks.
Redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until the midterm elections.
hear it first on Bloomberg.
We are 84 weeks before we hit the peak demand season, and this is what likely has been keeping a cap on prices, just a lack of demand, both from demand destruction because of higher prices, but also the normal seasonal demand destruction that we see in February, March, and early April. But that's about to change. Higher for longer, certainly through the rest of the summer into the third quarter.
That was Stephen Shork of the Short Group. You see higher for longer in the futures curve throughout this morning. You've seen it building now for a while. So take the front month of the futures curve. We'll take WTI, we'll take Brent. Check it out this morning. Brent around 106, WTI 95. Brent up every single day last week and up again this morning. But it's further out where things are getting more and more interesting. Not just later in the summer, but towards the back end of this year. You've now got Goldman this morning out with a report saying they now anticipate the fourth quarter will average $90.
Yeah, and that's $30 above where they thought before the war began at $60. That was the expectation. This to me is the more interesting aspect. And this is the boiling the frog aspect of this conflict. The longer it goes on, the more people are saying there are going to be structural deficiencies that are going to be hard to fill over the longer term and do mean the oil prices are not going to go back to where they were potentially anywhere in the near term.
Well, Goldman is talking about extreme inventory drawdowns if the Strait of Hormuz continues where we are now, this prolonged shutdown. This is why so many people I talk to feel like the market is broken because what you see on your screen is not matching up to really how dire it is when it comes to the physicality.
It's not upending this equity market run, that's for sure. 4 weeks of gains on the S&P 500 this morning, just about unchanged. On the Nasdaq, up a tenth of 1%. Semis, 18-day record daily winning streak could become 19. Thank you, Qualcomm. Qualcomm up by double digits in the pre-market on a story of a potential tie-up with OpenAI, up 11% this morning.
Yeah, and a discussion about creating some sort of smartphone imbued with AI. I want to know more details about this. This is actually really interesting on two fronts. Number one, how much this fuels another round of the semiconductor that is tied more to the smartphone product, which is Qualcomm. And two, what does this do for Apple if it is true, given the fact that the person behind this is Johnny Ives, the person who designed the iPhone, and the fact that Apple has a new CEO who is going to have to take that company into the future at a time when a lot of people have said they've been somewhat behind on the AI trend. So to me, this actually is a particularly interesting report that I want to get more detail on.
Not enough attention on that Thursday report coming from Apple, so looking forward to their earnings later on this week. That's some of the price actions, some of the themes this morning. Let's get you some morning calls. First up, Mizuho downgrading Adobe to neutral, seeing intensifying competition. That stock is down by 1.7%. Your second call from Piper Sandler raising its price target on Blackstone, noting management's positivity on IPO activity for the year. Stock just about unchanged so far today. And finally, BNP Paribas downgrading GE Vernova to neutral. That stock's had a massive run, predicting more difficulty sustaining growth momentum. That name is down this morning by a little more than 1%. Let's talk about the ongoing closure of the Strait of Hormuz, sending fuel prices higher and highlighting the need for reliable energy. Olivia Wassenaar, global head of the Apollo Infrastructure Group, writing, we see rising need for investment across midstream, LNG and power infrastructure, areas where private capital is increasingly playing an important role. Olivia joins us now for more. Olivia, good morning. Good to see you.
Good morning. Thanks for having me back.
Is it fair to say, and I think it's important to touch base with you on this issue, that this shock in the Middle East is not upending investment, it's accelerating here?
It is. I mean, I think we're all looking at it. We're looking at redundancy, right? We're looking at the current infrastructure in the Middle East and maybe where there are gaps, right? You're looking at things around existing pipelines. How do we max out existing pipelines? How do we think about where there's potential for new pipelines? Can you restart old pipelines? People are beginning to talk about things like rail again. So I do think in the Middle East, there's this real focus on redundancy. In the rest of the world, we're looking at where can we compensate. We announced a deal last week for a large Canadian gas infrastructure platform. We believe Canada is a really attractive market right now, especially if you look at what's going on with Canada LNG and access to Europe, access to Asia, really sort of a big part of the broader sort of value chain there. So we are very actively investing in other parts of energy infrastructure globally.
Well, let's go through the global backdrop and the deals right now. You mentioned Canada, you had EDF over in the UK, RWE in Germany, offshore wind, Ørsted, I believe, as well. I don't want you to pick a favorite baby, but right now, is there a theme that really gets your interest out of all of those right now, of those deals that you think are the ones to watch?
We've really been investing heavily in Europe. We do see this theme around making sure we're giving, again, real redundancy and growth in European power infrastructure. So we started RWE around the grid. We looked at EDF around nuclear. And now we're really focused on offshore winds with the Ørsted deal. I mean, this is a tremendous project. If you look at the number of homes it's going to power across the UK, it's really tremendous. And we're also thinking a little bit about, how do you give really reliable long-term powered supply to areas that have previously been really dependent on oil and gas from places like Russia and the Middle East.
You have a great lens because in having these discussions and these investments, you have to work with policymakers pretty closely to understand exactly what their appetite is, getting clearance, et cetera, and permitting. You noticed it changed when it comes to Europe in particular, as they try to accelerate some of their reliability, given the supply shocks that have come to them from all angles over the past couple of years.
Absolutely. I mean, we saw sort of the first start of this in 2022 around the Ukraine crisis, right? And that was the first time you saw sort of a pan-European focus on, okay, how do we make sure we're really more prepared longer term? Now with what's going on in the Middle East, you had a big announcement out of Europe last week saying we're going to focus on two things. One, short term around how do we really help the consumers? And then long term around how do we look at better permitting, faster permitting? How do we speed up electrification? How do we speed up things like batteries, which are going to help smooth out the intermittency, right? So there's really such a big focus within Europe on how do we make sure that we're taking this reliance away from other areas of the world.
The fact that everybody wants to build at the same time makes things a bit complicated. How much are you experiencing shortages of things like turbines and engines and the actual pipes and things of that nature, given the fact that everyone is trying to do this at the same time? At a time of potential supply chain constraints because of the Strait of Hormuz being blocked.
Absolutely. I mean, it's a real issue and it's something that we're all grappling with. If in the US, for example, if you do not have your sort of components around a new gas plant supplied, you're looking at 5 years, right? That's a long period of time to get to really get the new components in place. So this supply chain is just compounding. And when we look at what we're going to see around the rebuild in the Middle East, whenever this conflict is over, that is only going to add to the need for some of these components.
Every single Middle East country is coming out now basically saying, we want what the Saudis have. We want an east-west pipeline. We want to be able to bypass the Strait of Hormuz. Can you get the appetite for that kind of investment when Iran and the IRG still remain a threat?
I do think you're going to need to see some stability, but you saw it out of the EU last week saying, hey, how can we help with investment in the region to really, again, help this redundancy piece? When you look at pipelines, that's helpful for crude, but when you look at things like refined products, like jet fuel, for example, and LNG, these are things that are not going through pipelines. So we need to think of other ways to be able to transport these and really ensure that security.
To get that confidence, though, it's not even just for oil and gas. There's all this money put to data centers, and people now are talking about them having to go underground. Do you still see the optimism for people wanting to be invested heavily in this region?
I do. And the offer on the data center side was very clear for a while, right? I mean, if you look at it, there was cheap power in the Middle East. There was abundancy of land. There was lots of local capital. And for many years, this sort of real perceived political stability. You've sort of taken the last point of that off. I do think you still see the other components there, but there is going to be a little bit of confidence coming back to the region before you see people really wanting to reinvest in this AI phenomenon.
You don't have to worry too much about the political cycle in certain parts of the Middle East, and that's a different conversation. With Europe, maybe you do, and with the US as well. How relevant is the political cycle to some of these decisions?
you see a lot around, for example, renewable energy, right? And we've certainly seen, I mean, I've been investing in renewable energy for 25 years. You've seen real sort of booms and busts over time. What I will say is it begins to be tied more into security than it ever has before. I mean, again, as we look at Europe, right? This sort of dependency, whether it's on Russia or on the Middle East, and all of a sudden looking and saying, what can we do internally? What resources do we have? We have sun, we have wind, right? These are things that we continue to build up internally. We can look at electrification. So we're, again, less reliant on these commodities coming from other parts of the world.
Do you think there is a bigger focus now on abundance? I just wonder to what extent the conversation really has changed. Lisa mentioned that. It seems to me that everything's become very polarized, that for certain political groups, particularly in Europe, they believe everything that is fossil fuels or touches fossil fuels is bad, and everything that's renewable is fantastic under any situation, in any circumstance. And for whatever reason, the other side sees it completely differently. Do you think we have got some kind of moment here where we can just accept we need something from both worlds? We need abundance.
I think that's absolutely spot on. Right now you're looking at a crisis, right? And everyone is trying to figure out how do we fix this, right? If you look at Europe, Europe has spent about 25 billion over the last few months since the war started to get the same amount of energy supply they had before. So they're looking at it saying, gosh, rather than making this highly politicized, let's figure out again how we can homegrown energy supplies so that we're not dealing with these massive price shocks going forward.
And energy bills have been moving in the wrong direction, particularly in places like the UK.
Yeah, and that's the reason why you see, for example, some pension funds that previously couldn't invest in the fossil fuel industry suddenly allowed to invest in the fossil fuel industry because they're realizing, wait a second, we kind of can't deal with all of these things at the same time, and we need the returns.
Made some stupid investment decisions, or rather stupid policy decisions in Europe for quite a while.
Going forward, how much does this change exactly what this looks like, and how quickly can you enact some of these things? I think that the supply chain constraints are actually a really, really thing. So I was talking to someone who was building a power plant, and they said, we can't get the engines. We can't get the things.
Vernova, we mentioned.
Vernova. Right. I mean, that's the main constraint for GE Vernova, is that they can't get the materials quickly enough to build all of the engines and the turbines that people want. When you're dealing with that kind of issue, how quickly? That I think is going to become increasingly.
And there's a rush for the whole their hands on the same stuff. When it comes to Europe, though, they own those. Remember, they restarted coal and wind down nuclear when Russia invaded Ukraine. Nuclear at one point supplying 20%, 25% actually more of Germany's electricity.
Crazy. Olivia, good to see you. Thanks for being
Nice to
here.
see you, Phil.
Thank you so much. Thanks for the update. Olivia Wassenaar there of Apollo. Up next, Greg Deco of EY on the path ahead for the Federal Reserve. Plus, Yahira has your morning movers. Another look at Qualcomm this morning. They're stopped in the pre-market up by close to 11%.